So there is a current proposition that is being made that would allow people under the PDT rule to no longer be restricted to those same number of day trades. What's going on, guys? It's Ricky with TechBud Solutions, and here is a quick market update. Let's go ahead and just jump right into it. I really hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like I earned it. Day trading restraints to be loosened under the proposed rule change. So first off, has this actually been put into effect? No, it's a proposal that still needs to get voted on. Supposedly, let me make this very clear. US regulators are finalizing plans to replace a controversial rule that would dramatically lower a threshold for retail investors to trade equities and options more often. For those that are unaware, as of right now, if you have less than $25,000 with a margin account, you can only perform, I actually thought it was 3-day trades. I guess it just shows how long it's been since I've been under the PDT rule, but it says now 4-day trades within a 5 business day period. In the proposal being prepared by FIRNA's board to eventually vote on, retail investors would need to have only 2,000. So from 25,000, the threshold would now be 2,000 in their accounts for such trades. Now, is this a good thing or a bad thing? I guess it's just depending on how you see it. In my opinion, the reason that this was established, it says the existing rule adopted in 2021 was put in place to protect investors from massive losses and borrowing more than they can cover in their holdings or cash. You have to remember that when some trader, a beginner, has a margin account, let's say that you open up a $2,000 margin account. A lot of these brokerages, especially nowadays, are offering you huge amounts of margin, meaning that like if I wanted to trade QQQ, I can possibly trade 2 times to maybe 4 times with what I actually have in my account. So let's say I have $2,000. I can now possibly trade, depending on your brokerage and what they allow you to trade with based off of margin and leverage, I can now trade with $4,000 or maybe $8,000. And now if they get rid of this PDT rule, now I can reach that not only margin, meaning that now not only can I trade with 4 times of what it is that I have in cash, but now I can do it unlimited times. Meaning before, think about what the PDT rule does. It enables beginner traders that normally have less than $25,000, which is a lot of beginners. It enables beginner traders to be more selective, to wait for actual trade criteria to be met before you just take a trade because you can. It encourages you to actually focus on being calculated and intentional, because if not, then at that point it's just a wasted trade. At least that's how I've always viewed it. And a lot of beginners, especially that go through LPP, it's been an existing rule since 2001. So I've always tried to position it that way, where instead of you looking at the PDT rule like it's against you, and I get it, it's all perspective, right? Because maybe if you are very disciplined and you always only trade based off of criteria, you're one in few, because that is not a common habit that a lot of beginners make. Like, let's just be honest, right? But I can reassure you that the people that are going to get offended by me saying this are the people that are the crypto bros that are trading on 40x leverage and that don't ever have to worry about the PDT rule because crypto isn't regulated in the same way that the stock market is. But there's a reason why. That's why when crypto crashes, it crashes 70 to 80%. That's why their shit coins drop 99%. With, again, less regulation, it's not always just going to be better. It means, in my opinion, that things can be more chaotic, especially if you just enable beginner traders to now have unlimited trades with margin, with cash that they don't even really know how to grow or even manage. Because let's be honest, like if you only lose what it is that you have invested in that account, so be it. But when you begin to trade with 2 times to 4 times with whatever it is that that dollar amount is, and you don't know how to manage risk and the trade goes against you, again, that is where you can really begin to drain your account. The thing that I believe is very contradicting is that supposedly it says today trading is often commission free. and although not in all securities, there's often less concerns about excessive commission costs. And this is why supposedly, let me see if I can pull it up here. This is why supposedly like 50 different brokerages have written to FIRNA to get rid of the PDT rule. Yeah, it says more than 50 brokerages and clients have written to FIRNA, which request comments on a potential rule change in late October. And people are saying that, oh, you don't have to worry about it. It's, there's less costs that go into trading. This is, in my opinion, complete BS. How does Robinhood make money? How do all of these free trading platforms make money? A lot of them make money through order flow, meaning that they make a few cents per share on every share that you trade. So therefore, by enabling you and by allowing a vast number of beginner traders to trade more than 4 times within a 5 business day period, guess what? They get to rake in even more profits through order flow. That's the way that I see it. You let me know in the comment section what you think. But again, I am someone that always looks at the why. I always look for the why. Why would these brokerages be so eager to fight for the retail traders to be like, yes, lower the threshold from 25K to 2K, because they know that most beginners trade with at least 2K and they want to make money through their order flow, right? At the end of the day, not only will this present more potential volatility into the market, it will allow these brokerages to simply make more money through order flow, because that is where a majority of the beginner traders are. In my opinion, and it's just that, we don't have to agree, we don't have to see eye to eye, it's just my opinion. My focus, and again, even if you don't like me, I know that you will agree with me, my focus has always been to present the worst case scenario for beginners. I always highlight risk. And in my opinion, by reducing the threshold to 2,000, you're only enabling beginners that don't know how to manage risk, that don't know how to be selective with quality setups, and that will simply overtrade and drain their account quicker than if we enabled them to build healthy habits to not only grow their account, to learn how to grow their account, but you don't have to grow it from 2K to 25K. It's you learn how to grow it, you build healthy habits, and once you do, then at that point, when you have more confidence, you can begin to fund your trading account more when you feel like you are ready for it. But that's the biggest thing, is that why would you want to fund your account more when you don't know if you could even grow it? Now, I feel like beginners won't even go through that learning curve anymore, and they're just going to try to trade anything under the sun. Again, yeah, I get it. It's doomsday. That's the way that I see it. I just think it's laughable that these companies are saying, oh, yeah, 50 brokerages reached out. I wonder why. I wonder why they reached out in their client's favor to be like, yeah, you should reduce that threshold. Allow beginner traders. They don't have to worry about commission anymore. We don't charge it. We don't charge commission anymore. What do you mean it's going to cost them money? Again, just Google search it. Payment through order flow. Every single free trading platform, and even some that charge you commission, make money through order flow. Robinhood, order flow. Even with all the little FU fees that they try to charge you. So that's my 2 cents. Again, it doesn't matter what it is that you think or I think. It's always the people up top that will vote for it. And if it passes, that just means that I will have to work closer with my LPP team in enabling them and reminding them that they have to be more selective in the trades that they choose to take, because that's all we can ever do. I'm not here to tell you what stock you should or should not trade, but hopefully you see this as me enabling you to be selective, be calculated, and take risk into consideration. That it's not just always profit, but there's always risk behind every trade that you choose to open. And that's the way that I see this. So really excited to see what tomorrow presents. We have big tech earnings reporting on Wednesday, and I do plan to live stream it. So just another reason to subscribe to the channel. If you want to tune on into my live trading session tomorrow, remember I trade live every single morning right at market open, and it's the second link in the description down below if you want to tune on in. It's a one-time payment, lifetime access, and I hope to see you there. Like always, let's make sure that we end the year on a green note. Take care, team.